Hello everyone, I'm Tom Fox. I'm the Compliance Evangelist, and I'd like to welcome you to episode 328 of the FCPA Compliance Report. The FCPA Compliance Report is sponsored by Advanced Compliance Solutions, one-stop shop for all compliance-related services. Today I have with me Chris McNett. Chris is the Vice President of ESG, or Environmental, Social, and Governance at State Street Global Advisors. And he's here to talk to us today about the recently released State Street ESG Institutional Investor Survey. This really has a lot of interesting issues and intersections with the compliance space. So I wanted to visit with Chris about the reasons behind the survey's key findings, how companies can adopt an ESG approach, the challenges to adoption, what ESG pathways look like and how they're evolving, and why accelerating ESG is so important for corporate performance. This is Tom Fox. I'd like to thank you for listening to this episode of the FCPA Compliance Report. Hello, everyone. This is Tom Fox, and I'd like to welcome you back for another episode of the FCPA Compliance Report. Today, I have with me Chris McNett. Chris is with State Street Global Advisors, who recently released the ESG Institutional Investor Survey, and we're going to visit about this today because it was really interesting survey. It has a lot of implications for not only ESG but really in the broader compliance and ethics space that we're going to visit about. So, Chris, with that somewhat long-winded introduction, thank you so much for coming on the podcast and welcome.
You're welcome. It's a pleasure to be here.
So could you tell the audience who or what is State Street Global Advisors and what is your role with them?
Yeah, absolutely. State Street Global Advisors is the investment management arm of State Street Corporation, which is really one of the largest financial services firms in the world. And we're typically managing investment assets for institutional clients across a whole spectrum of different client types, ranging from foundations and endowments, all the way up to central banks or sovereign wealth funds. Many of you may know us perhaps a little bit better from our brand of ETFs or exchange-traded funds, which go by the name SPDR. We actually created the very first ETF. We're very proud of that. That's a little bit about State Street Global Advisors. We're the investment management arm of State Street again. My role, I'm the head of the ESG business group at State Street Global Advisors, or SSGA for short. So what that means is that I've got the really exciting role of working with our clients and really working with them and on their behalf to help them invest responsibly to enable economic prosperity and advance social progress, whatever that may mean. So for some clients, if they're an endowment or a foundation, they're really trying to fund breakthrough innovations. If it's a pension fund, they're really looking to provide and manage assets to provide retirement benefits so their retirees can retire with dignity. And fortunate to say that a lot of our clients are also looking to combine those goals with ESG or sustainability objectives. So I've got the fun role of working with them and my counterparts here at SSGA to help them do that.
Well, Chris, the reason I think your role and SSG's role is so important and why I really appreciate not only what you guys do, but the willingness to talk about it is I think if we're going to have real change in a corporate America, it's going to come from folks like you, companies like SSGA, and your investor class who really want to impact change. And here we're going to talk about sustainability and ESG, but it's in a variety of issues. You touched on just a few, but I really applaud you guys for going out there and helping corporations understand there are different ways to look at things, and there's certainly different ways to do things, which I would agree that, or at least I would argue they're better. So with that, could you maybe tell us a little bit about the institutional survey? What was the thought behind it, and what do you think it brings information to the table?
Yeah, I'm happy to do that. So this was a broad global survey that we released last month, and it comprised responses from more than 475 institutional investors around the world. So really nice representation of investors in terms of regions and different types of investors as well. And it really zeroed in on ESG investing, and in particular, what ESG investing means to them and their own strategies and their goals. What's their experience been? What are the opportunities that they're exploring? And as importantly, what are some of the challenges that we're trying to deal with that we could perhaps help them with? I mean, ESG investing, as you just mentioned, has become a really vital feature of many institutional investor strategies over recent years. So we were really trying to build a picture of the evolving role of ESG in investment programs, as well as the forces that are both driving and restricting acceleration. And so we've been managing ESG assets for our clients for more than 30 years. So that gives us a really good foundation to build off of and understand what our clients' concerns are and what their objectives are. But we really wanted to look more broadly and really get to the point of what's front of mind for them to help us better serve them, and also just to inform our own practice and our own strategy. And I would say at the top level, the survey has confirmed that awareness of ESG investing among institutional investors is definitely high. And interestingly, it's driven mainly by a belief in its potential to deliver long-term commercial benefits or investment returns, to put it a different way. But at the same time, there's a range of factors driving awareness and momentum, and there are some challenges. So we wanted to really understand what they are and create opportunities and tools to help empower investors to capitalize on the potential long-term benefits of ESG integration and to align, their ESG aspirations with action. Right? That was really the main objective here of the survey. So it created a lot of rich information for us.
Could you detail some of the key findings for us?
Yeah, absolutely. Well, I think right off the top, the main finding is that this broad adoption that we found is really driven by performance beliefs. And so what do we mean by broad adoption? Well, of the 475 respondents, most institutions, 80% of them already have ESG as a component of part of their investment strategy. Yeah, so that was really encouraging. But what's also more interesting underneath that is where we get to the performance motivation, is that more than 2/3 of the investors say that integrating ESG into their investment process, their investment strategy, has actually significantly improved returns. And an equal number, so a large majority, nearly 70%, said that pursuing an ESG strategy has helped with managing volatility. So this is really reinforcing, because it means that investors increasingly are taking what we say a no compromise approach to their ESG investment program, which means that they had the same performance expectations for ESG as they do for their other investments. And their experiences lived up to their expectations, which is encouraging. But within that, we do see what we're calling some missing depth, meaning that the depth of ESG exposure within most portfolios still remains pretty low. Only about 17% of the respondents had more than half of their portfolio assets with ESG inside of it. So there's still a lot of room to go. That would be one. On the challenges side, clearly we found that benchmarking is a pretty significant challenge for investors, where over half of respondents said that they frankly find it difficult to benchmark performance against peers, so other investors, but also it's hard for them to accurately assess how well their external managers are doing, like us. So it's a little bit of what are we measuring for, and then how do we actually get good measures of that performance. And you may be familiar with this yourself, but there's a lot of confusion around what exactly ESG constitutes, right? So there's terminology confusion, which is inhibiting some uptake, lack of clarity around terminology within organizations and also in the market, which makes it difficult to get aligned. And there's still some concerns around data quality and data availability, broader performance measures, and other internal capabilities and costs that can vary, according to where different investors are. So those were some of the really big findings there.
So with regard to the adoption-driven performance, you actually kind of went into a deep dive in how this is moving into the mainstream and the different approaches by some of your investors. I was just wondering if you could highlight some of the approaches you've seen and where that might lead either yourself or SSGA to recommend that institutional investors at least consider an approach.
Yeah. So, I think that fundamentally, while our survey found that, there is a really high degree of belief in the performance benefits from bringing in an ESG lens into an investment process, there's still a little, opacity, if you will, around what that exactly means and how it fits with their objectives. So, some of the main approaches we have seen really have started from a position of thinking of ESG as a lens to align a portfolio with your organizational mission or your values. And some of your listeners might know that this really harkens back to some of the earlier iterations of ESG investing, so more socially responsible investing. We find that that's still alive and well, but really the big pivot, the big aha we're seeing, is that we can actually potentially improve investment outcomes in the risk return sense of the word from using ESG. So what does that mean, right? That really means that, and why would an investor want to do that? It's really means that we think that ESG captures information about investments that's not readily available on a balance sheet or an income statement. So what that means is it provides investors with a more complete picture. Research shows that ESG factors are also increasingly important when managing assets for the long term. So we think the argument is pretty straightforward. ESG represents risks and opportunities that might be overlooked by a typical investment process, which is relying, nearly exclusively on financial metrics. So in this way, ESG is another input into an investment process to really complement the existing financial rigor. So that's the main recommendation that we're bringing to our clients is that done right to really deliver against those expectations that we talked about earlier in terms of performance benefits and volatility. ESG should really be integrated more deeply, especially when we think about how many investors in the survey said that they're satisfied, that it's been helpful to returns, but still it's a minority of the investment portfolio. So what that tells us that we think investors are not capturing the full benefits. And so we really think that this should be scaled across on investors' a portfolio more broadly in a more integrated way.
And I really appreciated in your point on ambition to action with the evolving ESG culture. You really talked about the importance of education and the importance of stakeholders having those types of conversations with boards or with the appropriate decision makers at the companies to really communicate that benefit. Is that a conversation that either companies are more willing to hear, or these types of conversations are more ongoing than before?
There's no doubt about that. That is one thing that also came through in the survey is that a lot of investors, nearly 80% of them recognize the value of engaging with companies in which they invest. But there's a sense that some of them may be trying to do too much with too few resources. That is a very intensive activity. And that's something that we really think that investors, ought to think about how they can, partner with their investment manager to do that or partner with other investors to do that. for our own business, we absolutely think that, especially now, right, in an age of really rapid technological change, and also in an age of the pro-sustainability consumer, that companies really need to articulate their strategies around good corporate governance in areas like talent development or innovation and sustainability, because it really helps them remain viable and competitive and maintain credibility among investors. And the good news is that more and more companies already understand this. And so not only do we find that more of the companies in which we invest on behalf of our clients are willing to have that conversation and very interested in what we have to say, because we are a very long-term investor, by virtue in particular of most of our assets being invested in index strategies. So we own a great deal of companies for the very long term. Companies are very willing to have that conversation, and often they're now doing outreach on their sustainability strategy and coming to us, coming to other investors, and seeking that kind of partnership. That is absolutely something that we've seen happen and unfold, and we expect to happen. And we think that that's good for companies and that's good for investors.
So I wanted to ask you specifically about the ESG partnerships, because I was very fascinated by that. Did I understand that the partnership could include a group of investors or multiple investors working together with someone like SSGA to talk to a group of companies, or is it something different?
No, it could very much mean that. So if you think about, there are already, many of your investors may know this, there are already a number of industry organizations where corporate governance, or ESG more broadly, is really a central part of that mission and that objective. And so I'm thinking of entities like the Principles for Responsible Investment, which is a UN-supported initiative, which is a framework for investors to incorporate ESG into their investment thinking, of which this kind of engagement activity, so proxy voting and engagement with issuers, is a foundational principle of that. I'm also thinking of entities like, for example, the Council for Institutional Investors, which are bringing investors together and also unifying that voice with issuers, with investee companies. And we also, yes, we do talk to our clients very often. More of our clients are interested in how we express our view on a company's performance and strategy on their behalf, and often they will come to us with an idea or a topic that they want to discuss. So we're very happy to talk to them. I would also say that another example is, we were one of the founding members of something called the Investor Stewardship Group earlier this year, which brought together a group of investors to really align around a set of common sense corporate governance principles as a form of a corporate governance code for U.S. investors. And we really think that whilst there's been a great deal of activity in general around corporate governance and that dialogue and that interaction between the owners of the company and the companies themselves, there's still need for more alignment. And that's what we were getting at with that partnership structure. I think, there's multiple pathways for that to happen. But we do think that that's a way to get more clarity and to get, and make that pivot from aspiration to action.
I really like that phrase, from aspiration to action, because that's really, in many business scenarios, it's all about execution, and that's where the rubber hits the road. And that's what you just described is, it's a great plan, but how do you execute on the plan? And you've laid out for us 3 or 4 steps that an individual, a institution, or a company can take to really execute on the plan you've laid out for us. Yeah,
well, we would agree. And we would also say that, this is important to do, not just for, the performance benefits of it, from an investment point of view, but also, I would agree with some of your opening comments that, if we can also in the process foster a longer term mindset, and, create better investment practices, both, within companies and on the hands of investors, then I think we can get a little bit closer towards true sustainability and a sustainable economy. And that means financially, but also environmentally and socially as well, right? And we think that that's in the best interest of investors, and that's what we're working for.
Well, Chris, this has just been a fascinating interview and podcast. I really appreciate you taking the time to visit with me. I'm sure my listeners will be very interested in your thoughts, and frankly, I look forward to continuing the conversation.
Yeah, I do too as well. Thanks for having us more. And I'll say if any of your listeners want to learn more about SSGA or State Street and our in general or around this survey, it's on our website, ssga.com, or you can email us at esg@ssga.com. And I thank you for your time. It was great.
Thank you. Hello, everyone. This is Tom Fox again. I'd like to thank you for listening to this episode of the FCPA Compliance Report. If you have any questions that you'd like to pose to me for a mailbag episode, please email them to me at tfox@tfoxlaw.com. Also, if you've listened to this podcast on iTunes, I would greatly appreciate it if you would rate us, as it would help in our rankings and help get the word out about the FCPA Compliance Report, the oldest compliance report in the compliance space. This is Tom Fox. Thank you very much for listening, and I hope you will join me again for the FCPA Compliance Report.